Dear keynote speakers, panelists, members of WBAF, participants, and guests. As the country chair for Switzerland, I welcome you all to the World Business Angels Investor Week 2025, coordinated by the World Business Angels Investment Forum, which is an affiliated partner of the G20 Global Partnership for Financial Inclusion, GPFI. This week, we've been gathering to discuss the global theme, Entrepreneurship Without Borders, Advancing Partnerships for a Sustainable Future. World Business Angel Investors Week 2025 will act as a dynamic catalyst, bringing pressing global challenges and pioneering solutions to the forefront at the key international venues, including the United Nations, the European Union, and G20 countries. In our interconnected global society, entrepreneurship's impact stretches far beyond individual nations, driving worldwide innovation, job growth, and sustainable progress. This year's theme, Entrepreneurship Without Borders, Advancing Partnerships for a Sustainable Future, highlights how vital cross-border teamwork, shared knowledge, and global partnerships are for unleashing the startup economy's complete power. Capitalizing on the impressive momentum from 2024, World Business Angel Investors Week 2025, orchestrated by the World Business Angels Investment Forum, WBAF, aims to forge an even stronger link between entrepreneurs, investors, policymakers, and industry leaders across continents. Through engaging roundtables, practical workshops, and dedicated networking forums, the week will explore how smart financial strategies and inclusive alliances can ignite sustainable growth, pioneer green innovation, and build economic empowerment in all economies, developed and developing alike. The event's core mission is to foster sustainable and inclusive growth by championing smart capital, investment that delivers not only funding, but also crucial mentorship, networks, and strategic connections. By breaking down the barriers to global entrepreneurship and ensuring everyone has fair access to resources, WBAF is working towards a world where every entrepreneur, no matter their background or where they are, can achieve success. During this special week, participants will focus on combining their collective knowledge and resources to empower entrepreneurs to be agents of positive change, building a future defined by boundless innovation, partnership, and entrepreneurship.
Dear presidents, prime ministers, country chairs and co-chairs, and dear participants. In an increasingly interconnected world, entrepreneurship has transcended national boundaries to become a global force for innovation, job creation, and sustainable development. The theme of this year's World Business Angel Investors Week, Entrepreneurship Without Borders, Advancing Partnerships for a Sustainable Future, reflects our belief that cross-border collaboration, shared knowledge, and global partnerships are essential to unlocking the full potential of the startup economy. World Business Angel Investors Week 2025, globally coordinated by the World Business Angels Investment Forum, WBAF, an affiliated partner of the G20 Global Partnership for Financial Inclusion, offers a unique platform to connect entrepreneurs, investors, policymakers, and thought leaders across borders and industries. It is a week dedicated to exploring how smart finance and inclusive partnerships can power sustainable growth in both developed and developing economies. The remarkable success of the World Business Angel Investors Week 2024 has inspired us all. Celebrated in 138 countries across 5 continents and 2 regions, the week united over 200,000 participants globally. With around 300 keynote speakers, 740 distinguished panelists, and the addresses of 4 presidents, 2 prime ministers, and 32 ministers, it became one of the most influential gatherings of the global startup ecosystem. I extend my gratitude to every stakeholder who contributed to these outstanding achievements. Entrepreneurship is no longer confined by geography. In today's digital age, a startup in one corner of the globe can scale internationally with the right support, funding, and guidance. However, to achieve this, we must eliminate the barriers that hinder cross-border entrepreneurship. That means ensuring equitable access to finance, fostering regulatory cooperation, and promoting inclusive policies that support entrepreneurs regardless of their location, gender, and background. World Business Angel Investors Week 2025 aims to advance global partnerships that can catalyze innovation and sustainable growth. Through roundtables, workshops, and networking forums, stakeholders will explore how early-stage equity markets can drive green innovation, social impact, and economic empowerment. The WBEF believes that sustainable economic development requires not just capital, but smart capital, investment that brings with it mentorship, networks, and strategic partnerships. By fostering entrepreneurship without borders, we are taking a stand for a world where every entrepreneur, regardless of nationality, has the opportunity to thrive and contribute to a better future. Throughout this special week, we invite angel investors, venture capitalists, policymakers, educators, and entrepreneurs to reflect on the role they can play in building a sustainable, inclusive, and globally integrated startup ecosystem. Let's harness our collective wisdom and resources to empower entrepreneurs as agents of positive change in the global economy. As we move forward, I'm confident that collaboration across borders, sectors, and cultures will unlock new opportunities for entrepreneurs and investors alike. Together, we can shape a sustainable future powered by innovation, driven by partnerships, and anchored in entrepreneurship without borders. I extend my sincere thanks to the organizing committee, our country chairs and co-chairs, global partners, and all speakers and participants for their invaluable contributions. Your efforts not only enrich this week, but help forge a brighter future for generations to come. Let's hug this journey together, united in purpose, global in outlook, and bold in vision. Thank you.
To set the tone for this inspiring week, we are honored to welcome our first keynote speaker, Dr. Ron Dembo. As a visionary leader in the industry, we are deeply honored to feature his unique perspective on integrating risk thinking and climate change into entrepreneurial ventures essential for a sustainable future. Dr. Ron Dembo is a leading authority on financial risk management and a successful entrepreneur, currently pioneering the measurement and management of climate financial risk as founder and CEO of riskthinking.ai. He previously founded and led Algorithmics Incorporated, the preeminent enterprise risk management software firm serving a majority of the world's top banks. With a distinguished academic career, including a professorship at Yale, Dr. Dembo has authored numerous papers, several books, including Risk Thinking in 2021, and holds many patents. His work, recognized by prestigious awards, now focuses on repricing financial markets to account for climate change through his innovative multi-factor scenario building and modeling. His theme today, risk thinking for a sustainable future, how entrepreneurs can lead a climate impacted world. He will be referring as well to the stories in the sequel of his book, Risk Thinking. Dr. Ron Dembo, you are welcome to this event. The floor is yours.
Well, thank you, Birgul. It's nice to connect with you again, and an honor to be part of this week. So I hope you'll find what we talk about to be interesting for your audience. So what I wanted to start with was the idea that any entrepreneur starting a new venture really has to deal with what's called radical uncertainty. You're sitting in your garage and you have this great idea and you think you're going to save the world, and absolutely convinced that this is the way to go, and you start, and everyone around you looks, you're nuts, okay, you're going to do that, it's such a big idea. But, entrepreneurs are somewhat stubborn and are not really afraid of dumping into the deep end without knowing how to swim. So let's start with understanding what radical uncertainty is. So, because that's what every entrepreneur faces. So radical uncertainty really refers to situations where the range of possible outcomes is not fully known, where the unknowns are so profound that traditional forecasting and modeling fails completely. So, there's no way, if you're starting a wave generating model and company to use the tides of Newfoundland to generate electricity, and nobody's ever done it before, you don't know what that will cost. You don't know whether anyone will buy it. You don't know whether you can produce it in a way that people will find acceptable. You know nothing, but you have this idea. In the case of algorithmics, my idea was really quite simple. I'm in Goldman Sachs. I'm a professor. I want to be a professor for the rest of my life. I have no intention of doing anything else. And I'm surrounded by a very good group of people, some of the best people in the industry. It's just like being in a good university, and I'm enjoying it. And I look around me, and as a mathematician, I see that, well, here's a bond desk, here's a mortgage desk, and they cannot even tell how they offset each other from a risk point of view. Isn't that silly? Why don't I just build an enterprise risk system that you could give to banks, and they'd be able to measure everything they're doing and know how to offset, And you think of it, it's kind of crazy. You're going to build something that you're going to sell to these massive institutions that are impossible to sell to at the best of times. And it's new. It's not the way they run their business today. And you're going to make a success of it. So anyway, I'm in my garage and I started. And, I have no funds to really develop it. There's no such thing as venture capital in the way we see it today. It was a long time ago. And so I'm in my garage and I say, well, you know what? I just got an offer for consulting in Spain at Repsol Petroleum. and they've offered me a retainer. And what I'll do is I'll use that retainer to fund it. So with the retainer, I go out and hire my first hire. He's a young, guy just graduating out of an MBA program at University of Toronto. And, I say I've got 20,000 a month to spend. I think I could do 3 of these guys. So I eventually hire 3. And we start building my idea of an enterprise risk system. Now, the first attempt I took go at trying to sell, we actually thought that we were going to be doing something quite different. And that was, I had developed a patent, and it was one of the first patents in financial engineering, which was how to replicate a new instrument with existing instruments. And the patent was very, very successful, became much more successful later. And I said, okay, why are we going to use that to build new instruments? And there was Bankers Trust selling at 300 basis point margins, these instruments, these new instruments. And they were things like long-dated options. So why a long-dated option? The Nikkei is sitting at 39,500. Everyone thinks it's going to drop. They would love to have a put option, which is essentially an insurance contract that will pay you if it drops. So I think, okay, I'm going to go and try and sell that. And first of all, we built it in a little spreadsheet with employee number 1. And it's, this little dinky spreadsheet, which takes my patent and shows you how you can take existing instruments and create a 2-year put option on the Nikkei. We go to bank 1, bank 2, bank 3. We find this guy who's really a way out entrepreneur himself. And he likes the idea. And he said, we'll do a joint venture. But he's really got me because I'm, this new startup. He'll give me 8% of the profits. Okay, it's not a great deal, but we'll do it. So we go to his board. And his board, so I'm sitting around the board of this bank. And the chairman asked me, well, what would happen if the Nikkei drops to 14,000? I said, or no, he said actually drops to 0. I said, well, you'd go broke and so would everybody else. So I don't think that's going to happen. Okay. And anyway, I said, we're hedged down to 14,000. So that's extremely unlikely. How should we believe you? So I try and give an answer to that. Anyway, we get it done. And the week we launched this product, which was a 2-year put option on the Nikkei drops, crashes. And within a few days, trading days, is right down below 20,000 from 40,000. That's not a crash, that's a disaster. And Bankers Trust, which had been offering put options based on a very weak model, which I knew, is scrambling. They have to get out of all of their positions. So they want to buy us out. And they buy this product out. So what was supposed to be $50,000 of revenue over the next 2 years for us became $1 million for risks for algorithmics, which I used to fund the company. And so, that was kind of problem 1. Problem 2 was nobody wanted to buy that again. The person that we did this with lost interest, and so we couldn't sell more of those. So what do you do? So that's when the enterprise risk came up. And we said, why don't we build an enterprise risk system? That's what's called a pivot in the industry. So as an entrepreneur, you really have to deal with that radical uncertainty. You don't know that's going to happen. You don't know you will do so well. You don't know that the person you're working with will lose interest. And you're in a new position and no one will buy what you're selling. So turns out we go to banks with this great idea of enterprise risk, and there's no one to sell it to. So they bring the head trader in, and the head trader looks at me and says, well, this looks lovely. Why would I buy it? because essentially it's going to take me out of business. It's going to oversee what I'm doing. And one thing leads to another. We go on like this for a few months and we say, okay, maybe there's a way we can sell to, this is eventually going to happen. My strong sort of stubbornness said eventually people will need enterprise risk. And so we go down to Brazil where there's 30,000% inflation. And we say, you know what, you can't use Black-Scholes models for pricing options. They assume a continuous market. And you're going to have a 15% drop in the futures by tomorrow morning, which if that happened in the S&P tomorrow morning, people would be jumping off Brooklyn Bridge, you know? So I sell it to some guy there who just made a fortune selling a mortgage product. And lo and behold, I signed a $2 million contract to build an enterprise risk system. And that was the beginning. So we now have a budget to build it. We start building it, and one thing leads to another. But this story goes on because we eventually get a very big bank, ABN AMRO, I can talk about it openly now, who says, well, we want you to build us a system for measuring the risk of a fixed income trading book. But okay, great, we'll do it. So this goes on for a year. They come over to Toronto. It is January 28th. And they say, you know what? I know we asked you to build stuff for measuring a bond pricing risk, but we've changed our mind. We want you to develop an equity product. And by the way, you have to deliver it in 5 weeks' time by the beginning of March. So I look at this guy, and I'm 6'1", he's 6'6" or something, Dutch guy. And I say, do you know that that's physically impossible? That if you gave me $10 billion, I couldn't build a product like that in 5 weeks, because it's like saying, you know, here's some grapes, give me Bordeaux wine, but you've only got 5 weeks to do it. Wine takes time, and so does software. And so he looks and I said, don't worry, you know, we will be in touch with the end user, you know, be okay, just do what you can. So we eventually really struggle with this. And I call him up, he goes back to Holland. I say, we absolutely cannot do this. You know, this will, so he says, okay, I'm canceling all business with you. They owed us 800,000 by that time, and you're not going to see a penny. And I want you to come to Holland, and we're going to break all contracts with you. Bring your lawyer. So I go to Holland, and standing in this room looking at this guy, and he looks at me in the eye and he says, they were our biggest customer, 90% of our revenue. You'll never sell another piece of software again. And, you know, whoa. So my lawyer looks at me and says, you know, what do you want to do about this? You know, and I said, you know, he's asking me to do something impossible. I can't do it. Anyway, a year later, this is the sequel to the story. I mean, 2 months later, we sell another $2 million deal to a bank in Mexico, which got us, you know, we would have been bankrupt otherwise. And this Dutch banker was a year later found guilty of insider trading and kicked out of the firm. So there's poetic justice there, but at any rate, that took us out of a almost deathly spiral into the beginning of algorithmics. And then by then, you know, the Bank of International Settlements was calling on banks to have enterprise risk systems. We already had some really advanced software, and we took off. So that's exactly when we were in the hockey stick and were taking off. But those kind of events, which are sometimes called the chasm, you're bridging the chasm. You know, you're standing on the edge of a cliff. You've got a very good idea for a bridge that you can build to get to the other side. And, on the other side, there's, gold bars waiting for you to just sell. But you've got to get across that chasm. You've got to find a product, as they say, I hate these words, but a product market fit. You have to do that. And that's a very hard moment that every entrepreneur faces. So why radical uncertainty? Why am I so focused on that? Because none of this stuff could have been predicted. And it starts with a vision one has. An entrepreneur has some vision. But that vision, we've got to be, as an entrepreneur, you've got to be somewhat flexible to know that when you hit a brick wall, you need to turn and pivot. And, that's not a bad thing. That's probably a good thing. So do it and embrace it. And when you hit your next brick wall, you got to pivot again, but you're going to be pivoting a few times. So what I thought I'd start off doing with algorithmics was building very fancy models to build fancy new products. I ended up building, an enterprise software product. Now, anyone knowing what it's like to build an enterprise software product to sell to worldwide banks when you're sitting in your garage in Toronto would say, you're nuts. You're going to need 400 programmers, 65 financial engineers, offices in all these countries, a sales force. How are you going to do that? And the answer is, I don't know. And so we actually did it. And, that was the algorithmic story. So now I'm in another story, which is the climate story. So climate is a radically uncertain problem in and of itself. And, if our governments really understood it as a radically uncertain problem, they would understand what to do with it. And in radical uncertainty, you look at many, many scenarios in the future, because that's all you have. But you don't ignore any of them that are feasible. And one feasible event that is the case with climate is that we will ruin this world for ourselves. It's actually quite feasible, because if runaway climate occurs and major changes occur in the flows in the ocean and things like that, which are all feasible, maybe unlikely, you won't be able to grow wheat in Saskatchewan. So Canada won't be a wheat exporter. It'll be an importer. You won't be able to grow wheat in Ukraine. Where will you get wheat to feed people? And we could land up in a completely chaotic world. So you know that even if that was a small probability, small chance, as a radically uncertain risk manager, you would say, I don't care how small that probability is. It's going to absolutely ruin the world. And there's only one of these worlds. So we better get rid of the carbon we're generating. And there's a story at Goldman Sachs that I always used to guide me in this. There was a guy, Bob Rubin, and he became the Secretary of Treasury. He was the CEO. And when I went there, it was a small firm, and he one day walked into my office and was called me to solve a problem. But he wrote a book, and he said, I was brought this deal from my head of fixed income that he was trying to sell me. He said, look, we could make billions on this deal. And I asked him, this is Bob Rubin, I asked him, what's the downside? In other words, give me some scenarios that are not so pretty. And he said, well, look, there's a scenario that if the US defaults on all its debt, we would be bankrupt. Well, that's never happened, so don't worry about it. But Bob Rubin's response, which is a really perfect entrepreneurial risk management response, was, we are running a good business. We're doing pretty well. Why should I take any risk, even a small probability of us getting killed by some? Now, if Lehman Brothers would have thought that way, they would still be in business. But Goldman didn't. And so that's the sign of a really good risk manager. Because, in some sense, probabilities don't matter. If there's an event that could really destroy risk thinking, the company I'm working in, I don't care how unlikely it is, I will hedge myself against that. So I could go on with these stories, got lots of stories to tell. I'm not sure if we have time for them. How are we doing on time?
Well, we have 5 more minutes left. Maybe we can take one more story and then we will go to the closing remarks.
Sure.
Thank you.
So we have a board member who's a famous astronaut who told me a wonderful story. I mean, and astronauts are entrepreneurs, really. They're out doing something no one's ever done before, breaking new boundaries, taking enormous risks, and the risk of losing one's life, right? So they spend a lot of time, and he spent ages in NASA rehearsing for the moment when he'd be running the space station. And endless different exercises, endless different scenarios on what could happen, what couldn't happen. But they wanted to break the boundaries. They wanted people to do spacewalking on this mission and to go out there and fix an arm that's on the space station. Canadarm, it was called. And so there is Chris, and he steps out of the space station. Now, and you're in the space station and you step outside and look down, there's nothing. Like, what if I fell now? What if the tube that's holding me breaks and I just go floating in space? No one will ever find me. So, the risks are enormous. And, they've rehearsed for us this, they've really got very good equipment. And they go out and they're there with spanners and fixing the arm. And all of a sudden, he notices that his right eye can't see. It's like, what's going on? And he ignores it. But he calls the space, the Houston. He said, look, I've got an eye I can't see out of what's happening. So they quickly go through a million scenarios and trying to understand what the cause of this would be. Is it oxygen? So they test oxygen. Is it this? Is it that? But all of a sudden, his second eye goes blank. And so now he's blind. He's outside in the middle of nowhere, literally middle of nowhere, and can't see. But he's still trying to work, and he speaks to his colleague, and the colleague says, look, we've trained for this, let's just carry on. He does. Eventually, they can't find anything wrong. He gets back in the space station, and he found the cause was really, the dishwashing fluid that he used to prevent fogging on his helmet. He used too much of it, and it actually made his eyes tear. But in space, there's no gravity. So your tear just stays in your eye. And eventually it clogs the eye. And that's what happened to his two eyes. But there's one most amazing story I have to tell. And I think it's my heroes of all time were the Apollo 13 people. There you are in the middle of nowhere, again, 200 and something thousand miles from Earth, and you're losing oxygen, and there's not enough fuel to get yourself back. And you've got a bunch of people rehearsing, and what they do is they've got a twin of this. You've moved into this landing capsule, which has got some oxygen, and they've got a version of that on the ground. It's not a digital twin. This is a physical twin. In today's world, it would be a digital twin. And it's a complete replica of where they are. And so they have to solve all sorts of problems right there and then. I mean, all of a sudden they notice the carbon dioxide level in this space capsule is actually growing, and they'd actually becoming toxic. So they have to develop a method for reducing carbon dioxide in this module in real time with nothing except, Scotch tape and a couple of, and they do it. So they find a way to reduce the carbon dioxide. But they've also they've got to find a way to get these guys back home. And so they get stuck in, and there's one of the things that's so important about this story is there is no alternative, right? You really are there and you've got to do something. That's very much like entrepreneurs. You're already here, you're at the chasm. You've got to either die as a firm or do something to get over that chasm. So you get clever. And in most cases, you don't have money to just buy your way out of it. So you've got to invent something to get yourself out of the chasm. And that is an interesting moment, because too much money just allows you to buy your way out of these problems, and eventually it kills you. And too little money means you got to get clever. So you get clever. And these guys came up with this almost harebrained idea. We're going to not go back to the Earth. We're going to go to the moon, slingshot you around and go back to the Earth and hope we have enough fuel. You barely know. And they risk managed this all the way back. I mean, they had to actually navigate by looking at the Earth and setting their course rather than with instruments, and decide how much to press on the gas to be able to turn the vehicle. It's a metaphor for entrepreneurship. You really have to be ready for those moments where there is no Father Christmas that'll come with money and buy you out. You've either got to get over this chasm or go home. And so those moments are when you look back at them, is when it's like the moment I had with the Dutch banker. You get really clever and you take all the brains in around you and you come up with a plan. And get ready to face that if you're an entrepreneur.
Absolutely. Fantastic stories, Dr. Ron Dembo. It is really a great pleasure to have you at this event and get your insights and have this analogy with all the events or incidents or stories that you are telling to us. And it is all about being creative. It is all about being very smart, clever in impossible times and in radical, uncertain times, as you discover. Excellent. Thank you very much for your participation. It was an honor to have you in this event.
Well, Birgul, the honor is mine. Thank you for inviting me, and I hope you found that interesting.
Absolutely. And I'm sure that our audience will be fascinated with this keynote speech from you. Thank you so much. To keep the momentum for this inspiring week, we are honored to welcome our next keynote speaker, Ken Forster. He will share valuable insights on topic Scaling Industrial Impact Ventures Across Borders, Lessons in Sustainable Digital Transformation. As a founding partner of Momenta, with a strong record investing and growing industrial impact startups with expertise in digital industry, venture capital, and scaling connected products in energy, manufacturing, and smart spaces, we are deeply honored to feature his deep insights into cross-border digital transformation and sustainable industry innovation. Highly relevant to entrepreneurship and sustainability, Ken Forster's valuable contributions would reinforce our commitment to fostering a dynamic and enriching experience for all participants at our event. Ken Forster is a lifelong digital industry practitioner, building connected products, services, and businesses at Fortune 100 companies and startups. He founded Momenta in 2012, the leading industrial impact venture capital firm, accelerating industrial innovators across energy, manufacturing, smart spaces, and the supply chain. Since their start, his team of deep industry operators has invested in and helped scale over 60 innovators focused on improving critical industries, the environment, and people's quality of life. Dear Ken, welcome to our event. The floor is yours.
Thank you, Dr. Cotelli. I really appreciate that great introduction. It's an honor to be part of this event, discussing our experience scaling industrial impact ventures. So over the next few minutes, I'd like to really touch on three topics. So why do we invest in industrial impact? How do we scale our companies? And really, what has been our impact in doing so? So let's start in terms of why we invest in industrial impact. So we define industrial impact as applying digital technologies to improve the critical industries of energy, manufacturing, smart spaces, and supply chains. Why industrial? Well, globally, these industries contribute over 30% of economic value, employing half of all labor, but they also consume over 70% of energy and emit over 80% of greenhouse gases. So when we think of impact, what do we mean by impact? Well, economically, the digital transformation of these industries, really powered by artificial intelligence, is forecast to drive over $6 trillion of global economic value by 2030. Environmentally, these industries can also reduce their emissions by 30 gigatons annually. It's 75% of last year's total emissions globally. So we believe this future is being written by innovative early growth stage startups, yet it'll be scaled up by the large industrial technology leaders. Thus, we count Rockwell Automation, Advantech, Semtech, and other industrials as our limited partners or LPs and our co-creators. So this has been our playbook since 2012, 136 investments across 61 portfolio companies, $100 million in value created across 19 exits, and over 5 what we call digital industry funds. Now, we're looking at 3 key investment areas these days in our digital industry funds: industrial AI, software-defined automation, and integrated robotics. So let me talk a little bit about what those are. Industrial AI is the application of artificial intelligence to optimizing critical operations from continuous process control to discrete factory floor operations. So we go chip to cloud across the key sectors we talked about earlier. Software-defined automation is the evolution from traditional fixed hardware-based control systems, which are still quite the norm, to software-based, flexible, modular, reliable, and device-agnostic systems. Here we leverage the technology trends of virtualization, edge and cloud computing, DevOps, and open source software. Now, integrated robotics we see as the deconstruction of traditional proprietary robotics, moving to a modular, mobile, and fixed robotic systems built with open operating systems and electronic hardware, all of which allows for heterogeneous robot fleets and coordination. Now, with that backdrop and context, let's talk about how we help scale the companies that we invest in, our portfolio companies. So investing in industrial tech is bit different from broad venture capital. Industry, first of all, our industry is highly consolidated among national technology leaders, as I mentioned earlier, Rockwell Automation, Emerson in North America, ABB, Schneider Electric, and Siemens in Europe. The assets in industries such as machine tools and factories and pumps on water utilities, et cetera, are deployed for decades. So there is no, traditional rip and replace scenario toward technology adoption that you see in the consumer electronics space. And finally, the operations these systems manage are often high value, critical, and tied to life safety. So that means our green really comes from brownfield deployments, often overlaying existing operations to provide new capabilities, better precision, and always moving towards some form of autonomy. So as such, we work early and often with these industry leaders as partners, investors, and acquirers of our portfolio companies. We anchor every one of our funds with one of these industry leaders, sharing deal flow, developing co-creation plans, and working to accelerate our company's commercial and technology tractions. Now, we are not corporate venture capital, but we're an institutional venture capital firm with strategically minded, deep industry operators, well aligned to our founders' DNA and motivations and that of our LPs. Now, our team spends a significant part of their time working with our portfolio companies, serving on their boards and advising them. Some of our team actually is dedicated to driving co-creation with our limited partners, so literally walking the halls of those limited partners, developing commercial opportunities for our companies. This often allows our companies to expand their market geographically or by sector, creating optionality for our founders. We also we just hosted one now, regularly host cross-portfolio activities, from best practice sharing webinars each month to regional meetings at trade shows at annual events and an annual event. As an example, we had 12 of our portfolio companies exhibiting at the recent Hanover Messe Fair industrial event, meeting several of our LPs as well. Now, with that, let's really talk about our impact. So as a VC, we're naturally going to start with our financial metrics. Suffice it to say that we were recognized by PitchBook in 2024 as one of the top 10 fund managers for early stage venture capital, with 2 of our funds demonstrating consistent top quartile returns and the others in the upper quartile. Of our 61 portfolio companies, we've had 19 exits, as I mentioned, 1 via IPO, and all the rest strategic acquisitions. Now, our most recent exits include Silicon Valley-based edge AI company Edge Impulse, which just sold to Qualcomm recently, and Canada-based steam monitoring company Pulse Industrial, which just sold to Spirax Sarco, the leading provider of steam equipment. But when I think about impact, it's really just the beginning. Now, we're an SFDR under EU regulation, Article 8 plus registered fund, so what we call a light green fund in terms of impact. So we track a broader set of metrics. Socially, our portfolio companies employ about 8,200 people, hold over 400 patents, and actually collectively share a market cap of about $7.2 billion. Environmentally, I've got 3 interesting examples that I give you. Call them anecdotal evidence, right? Number 1, Tavaret, based in Frankfurt, provides metal casting AI, which has helped their clients avoid over 900 tons of CO2 emissions per year per plant, while providing average energy savings of 18% and up to 50% in scrap reduction. Pulse Industrial, who I just mentioned a moment ago, the company was just acquired, helped their clients last year save over 1.5 billion pounds of steam, avoiding 72 tons of CO2 emissions, saving over $2 million in energy costs. Finally, Waste Hero, Danish company providing an intelligent municipal waste management platform, helped their clients reduce refuse pickups by over 68% and overflowing trash bin complaints by 95%. And all while avoiding over 70 tons of CO2 emissions. And by the way, extending the life of their refuse trucks by up to 2.5 years. So these are just a few examples of how we do well by doing good, driving industrial impact, all while driving high velocity exits for our portfolio companies and upper quartile returns for our investors. To learn more about us, you can visit our website at momenta.one, that's O-N-E. I again thank you very much for the opportunity to speak at this event. Dr. Cotelli.
Ken Forster, thank you very much for your very, very insightful speech, actually. And I have learned a lot from your speech. You know, coming from the financial world, learning about what is going on in the industrial world, and as an institutional venture capitalist, your impact in the industrial area is really fascinating. And doing well by doing good, that is a very, very nice summary of what you were telling us. Thank you very much for your presence and being a participant as a keynote speaker in this event. It was really fascinating. Thank you very much. Dear panelists, members of WBAF, participants and guests, as the country chair for Switzerland, I welcome you all to the World Business Angels Investor Week 2025, coordinated by the World Business Angels Investment Forum, which is an affiliated partner of the G20 Global Partnership for Financial Inclusion, GPFI. In an increasingly interconnected world, entrepreneurship knows no boundaries. The rapid evolution of technology, access to global markets, and innovative financial models have enabled businesses to expand beyond local ecosystems and thrive on an international scale. However, to fully harness the potential of entrepreneurship as a force for sustainable development, we must foster stronger partnerships across borders, bringing together entrepreneurs, investors, policymakers, and institutions to create inclusive, resilient, and high-impact business ecosystems. We will explore how cross-border collaborations can drive innovation, open new funding opportunities, and strengthen the global startup economy. We will emphasize the importance of inclusive entrepreneurship, ensuring that diverse voices, perspectives, and talents are recognized and supported. The discussion will highlight the role of financial innovations, policy frameworks, and digital transformation in breaking down barriers and enabling businesses to scale internationally. Today, I have the great pleasure to welcome our distinguished panelists with international business background to discuss about unlocking global collaboration, strategies for entrepreneurial success in a sustainable world through innovation, investment, and intellectual property. Surabhi Shenoy is a serial entrepreneur. I would like to pronounce this in French, and I'm proud to make it female, and exit strategist who has built and sold 2 multi-million-dollar companies across the fitness and tech sectors. Today, she works with founders across the globe to build profitable, founder-free, and high-valuation businesses. With 25 years of hands-on experience, she brings a rare mix of strategic clarity and operational depth, equipping founders with the systems and thinking needed to scale sustainably and build companies investors want to buy. Welcome, Surabhi.
Hello, everybody. Pleasure to be here.
Thank you. Dr. Benjamin Del Sol is the world-only fractional Chief Intellectual Property Officer and Chief Intangible Assets Officer. He is also an international partner of WBAF. He is a seasoned European patent attorney and litigator with a PhD in quantum physics, a Master of Law, and a diploma in neurosciences. He is also the chairman of the IP Strategy Committee at the International Institute for IP Management. Benjamin works with some of the most cutting-edge companies in the world, from startups to scale-up and multinationals, helping them turn their innovations into powerful business assets. With his rare blend of scientific expertise and strategic vision, he transforms intellectual property into a true growth engine, supporting funding, competitive positioning, and long-term value creation. He turns IP and intangible assets into a weapon of mass construction. Welcome, Benjamin.
Welcome, everyone, and thank you. Thank you very much.
Thank you. We also have Ralph Mojicato, who has over 25 years of experience in the financial industry in Switzerland, Germany, Austria, and Singapore. He is now an investor, board member, and advisor for startup companies in the technology field with focus on B2B fintech and insurtech. And he is a guest lecturer at several universities of applied sciences, as well as a lecturer at the University of Zurich. Ralph is one of the co-founders of SICTIC, the largest investor angel club in Switzerland. Welcome, Ralph.
Yes, hello. Thank you for being here.
Excellent. Without any further ado, I would like to start tackling our topic, which is, again, unlocking global collaboration strategies for entrepreneurial success in a sustainable world through innovation, investment, and intellectual property. So let's start talking about this global collaboration in action. My first question goes to Surabhi. Surabhi, you have built and scaled companies across different countries. What's a fun and surprising lesson you've learned about collaborating with partners from different cultures, especially when it comes to innovation? The floor is yours.
So in my tech company, we work with India, of course, and Europe and US. Working with Germans, Russians is very different than working with Indians. We wear our emotions on the face, on the heart. Building relationships is a lot easier in India, I feel. Whereas if you work with Germans, then it's a lot more process-driven, very precision-driven. Working with Russians, there are no filters. The feedback will come straight to you. But it's a unique experience and it's on its own. What we need to do is actually read behind the words, go behind the words and read those cues and learn from that. And I think in the early stages, my interpretation of what they say and what they mean was very off the chart. And that created a lot of funny incidents. But I think what unites us, puts us together, is fundamentally everybody wants one thing. Potential customers, I mean to say. And it's not about the product. It's about their feeling that you care. You genuinely care to solve their problem. You genuinely care to go beyond what they're suffering with. And if you show that sincerity, I have experienced they go out and about to help you get into their space and build from there. So finally, we are all human beings. Geographies, cultures do play a role. But if you go beyond that and connect, I think it becomes easier.
Excellent. So you have really mentioned very important topics regarding the different factors, different cultures, and having this connection with the humanity, of course, and being human, it is actually very, very important. Thank you very much for this insight, Surabhi. Now I'm turning to Ralph. Ralph, you've worked with startups and investors across Europe and Asia. Can you share a moment when cultural differences actually sparked a great investment or partnership opportunity?
Yes, thank you. I'm a fan of investing in your own country. So as a Swiss, I'm only investing in Swiss companies, and our Angel Club SIGTIC is specifically only investing in Swiss companies. Nevertheless, when I look at my portfolio and all the other companies, we have really a super diverse international founder teams. And that helps a lot of two reasons. First, the Swiss market is mostly very small, and B2B, it's global or internationally going is very important, so it helps. And just one example was an insurtech of two South Africans with German roots. Both living a little bit in Africa in some countries, then went to London, landed or stranded in Switzerland with their families, with two other co-founders from the UK. And it was from the beginning clear that Switzerland is too small for their ambitions. And we had 90% of our customers were from abroad. So, and that is the most usual thing I like. And it's also super exciting to have these people on board. Investor side, it's the same. You have people from different cultures with different opinions, but I think it's always important that you understand a little bit the culture of the other persons, just to understand some signals. It's never that you understand everything, but it helps.
Absolutely. Thank you very much, Ralph. And you're right. Switzerland, being a tiny country of about 9 million population, and I am being part of that country as well. It's true, we are small. However, we have a very global reach in everything that we are doing. So with investments, with the a good part of the population also being very inclusive with other cultures. I believe we have about 30% of our population being foreigners. So we have a very, very nice mix, and that is also reflected in business. Thank you very much for your insight, Ralph. And I would like to perhaps continue with you now to tackle the next topic, which is building trust and attracting global partners. So from your experience as an investor, what's one simple thing entrepreneurs can do to build trust and attract international investment, particularly for sustainable ventures?
I think this is a general rule for me, and thus would also be true for sustainable or any other topic or industry. So as a startup, especially the ones we are looking at are early stage, young entrepreneurs, mostly no entrepreneurship experience. And they're starting with a lot of balls juggling in the air. I always say it's about 27 balls, clients, new employees, new markets, POCs, projects. So a lot of things are really, really difficult for them to handle. And I always tell them to focus on some of the balls, and whatever they do is what they're saying they're going to do, they're going also to make happen. That is the only thing I see. So it's a simple rule, walk and talk mostly. And the rest is if they saying this is the business plan has a dramatic high growth rate, we will see if that happen. But when they say they're going to be next week there and their meetings are there, and they do that in a good way, then I'm feeling then that will be building trust.
Excellent. Thank you very much for these insights. Now I will turn back to Surabhi. Surabhi, as a coach and entrepreneurs, what mindset shift do you recommend to founders who want to grow globally and make their business models appealing to both investors and collaborators?
Well, what I observe is founders rush too quick, too fast into global markets. And because the opportunity looks big especially from the outside. And what they forget to do basically is test the product for that specific market. Localization of their use case that works in this country may not work in the other country. And the way I look at things is, look, growth is expensive. It needs cash. And especially if you're driven by investors and VCs, you're burning somebody else's cash. So you better be careful when you are expanding into other geographies. My personal experience, most founders rush in too fast, too quick, and therefore get burnt out. So total clarity on what's the use case I'm solving in this specific geography, how will culture shape buying behavior, the price parity, what needs to be localized, the product messaging, positioning, all of these things need to be thought through. And only then you can actually dive in, because otherwise you're going to lose control over where you're building, as in your route. And even this may suck a lot of cash out, and therefore the burnout, and nothing gained then. And therefore, I think the biggest shift that in the mindset is to absolute clarity in terms of what needs to be. It's not the proving that you're brilliant, but it is proving that you're investable in that geography as well. And business needs to run day to day without their presence, designing for predictability, and all these things. In short, they have to think global, but validate in a local market. And not be ambitious, but really design business for scaling in that particular expanded geography. I hope I answered that.
Yes, thank you very much. I believe that know your market is basically very, very important for the startups. And you are perfectly right. If you are bootstrapping is one thing, you are burning your cash, but if you are spending the money of your investors, then you have to be even more careful, of course. Thank you very much. Now I will tackle perhaps the topic of innovation and intellectual property across borders. And we have a specialist with us today. Benjamin, you help investors and innovators protect their ideas worldwide. For founders working with international partners, what's an easy first step to safeguard their innovation and intellectual property?
Thank you. Thank you very much for this great question, because it's a very fundamental question, and I hear it quite often from deep tech funders, for example. So we must start with there is something which is very clear, that innovation has no value without protection, and protection has no value without strategy and alignment. So if we want to start with, there is the first and easiest step for any founder working with international partners is first things all, sign a strong, clear, and well-structured non-disclosure agreement. It can seem like just a legal stuff, but basically no, it's also a signal, a business signal you send to your partners. It sets the tone that intellectual assets matter and provide trust boundaries are right as well from the beginning, which is very important. And of course, no sharing of prototypes, technical specs, roadmaps, business models without an NDA first. But that's not enough. I mean, NDA is basically the first step that you do. But the main question is, what do you want to protect? What is really your sustainable advantage, And what we think first, it's trade secrets, because it's cheap. It's very cheap to protect your trade secrets. So not everything needs to be patented, especially if it's an internal process, algorithm, or material composition that can be kept confidential, of course. Trade secrets are often faster, cheaper, and highly valuable, but only if, of course, the company implements strict internal protocols. That includes access control, employee training, encrypted documentation, and so on. So because if you can't prove it's been treated within your organization or your partners as a trade secret, then legally it's not. So this is really the first thing. Then I would like just take the advantage of this discussion to go a bit further, and then to talk about patent filings. A lot of companies think that they should file an international patent application because they want to go international. But first thing for all, you can start with a national filing. which is often a very first tactical step, you know. So usually in the country of your R&D or core market is. And then it gives you a legal priority date and 12 months to explore additional markets and seek investment. And this is very important. I mean, we use what we call the PCT, so it's a Patent Cooperation Treaty, that basically this international mechanism gives you up to 30 months to expand your protection in over 150 countries. It's like hitting the pause button, basically, while you build traction, validate your business, and select strategic jurisdiction, find partners in various countries, and so on. So it's exactly what we were talking before. You can test the market before paying to be protecting there, knowing that you will be protecting there retroactively speaking, thanks to this mechanism. So it's very, very important. And of course, all of that must be based on strategy. I mean, the most important thing on IP is that you need to use IP as a business tool. And that means IP must support your business strategy. And if you don't do that, if you just file things thinking that it's the best move and I need to be fast and I need to file things, you will just burn a lot of cash. And as we were discussing, so most of the time it's not your cash. So you have to be very careful with that. And you really think strategy when you talk about IP and not just as a legal aspect, you know.
Absolutely. Great advices that you are providing to us, Benjamin. As a follow-up question, I would like to ask you, can you share a cool example where a smart IP strategy helped a startup expand globally and attract investment, especially in the sustainability space?
Yes. Yeah, sure. Yeah, exactly. Yeah. Okay, yeah, good. I have one. It was a startup, a deep tech startup, and specifically a clean tech energy startup. They had developed kind of a revolutionary energy storage system with a unique chemistry that solved basically two major challenges at once: high density storage and sustainable low cost materials. So it was very interesting. And of course, you see directly that they could go global. So the main challenge that was the technology alone wasn't enough. I mean, the founders were very brilliant scientists, like all the time, basically in deep tech companies, but they were preparing to go global. You know, they were already speaking with investors from the US, EU, and even Asia, already in some R&D partnerships discussions, and exploring also some possibilities for licensing models. So a lot of things at the same time, you know, and the risk is that their IP wasn't structured correctly. The entire value proposition could collapse if you don't have the correct architecture. So hopefully, I would say, I have been able to work with them so as a fractional chief intellectual property officer, and to craft and implement a complete IP strategy designed to serve the business plan they had, you know. And of course, when you have all these different aspects, where you have partnerships, go-to-market strategy in some countries and so on, you don't have only one IP strategy. You need to have various IP strategies. You know, it's like a fractal aspect of the IP strategy. So we started with a full innovation of the audit, of course. So not just what was patentable or already patented, but also what could be used as a trade secrets. Again, very important trade secrets. So many people don't think about it, but it's very, very important. You may have no patent at all, but you can be very, very valuable if you have trade secrets. So of course, I will be very fast on that, but basically the core energy storage mechanism was patented in a specific way that allows some scalable IP blocks, but I will not go into details in that. But at the same time, what we did was a strategy mixing patent and trade secrets at the same time. And so even for partnership and licensing, it increased the value because you don't just license a patent. You license a patent and you license some know-how. And even some negative know-how. That's very interesting, you know, because most of people think that know-how can be a trade secret. Okay, that's kind of common knowledge, but negative know-how can also be valuable because knowing what doesn't work, especially in chemistry, for example, will make you reduce the time of R&D a lot, while your competitor is trying again and again and again, but you know that it doesn't work. So that's even this negative know-how can be a trade secret. And so what we did after that, we went for international patent applications, and we mapped then the countries they wanted to go with their partnerships and where they had already a market. And then, of course, where the competition was. So the main idea was to use IP as a roadmap for choosing the countries. And at the same time, also, we even worked with the R&D teams with IP data to drive the innovation within the company, to be able to create some new partnerships. And we had also, so that was a great story with them, because we had also everything about open innovation, leading to creating new product for new markets, thanks to collaborating with partners from different countries. And of course, the main question, and it has already discussed previously in the discussion, it was the culture. The culture is not the same between companies. And when you talk innovation, when we need to work together to create something, if you are not flexible on the culture, it can be very complicated.
Excellent example. Thank you so much. So I have learned a lot, Benjamin. So very interesting to highlight the negative trade secrets.
Yeah.
And it is true that, when you are investing money and time in creating a know-how and trade secret, that is very valuable. But if you have already tested and it is not working, making it also available to other people as a trade secret is very important, so the others can focus on something else. Very, very interesting point. Thank you. Well, I will go now to the next chapter, which is about making innovation and investment work for sustainability. And I would like to come back to you, Ralph. My question is, what's a practical tip for founders to make their sustainable innovation stand out to global investors and partners? So I think a Swiss perspective here would be very interesting.
Yes, thank you. And I will just add on the IP some words. I'm practically not such a fan of patents, or I have never invested because there is a patent.
Yeah.
And to answer the question here, a practical tip, well, in a global scale, patent can help, of course, because it shows like it's protected IP, and it shows that it's registered. Nobody else, they don't hurt anybody other's patents, so that's very helpful. That's one of the tips. And the other tip is with sustainability, it is a global market. So I have not seen many startups who would be just locally doing something. So it's from the beginning, you have to have a global strategy. So a diverse team is helpful. So people with different cultures to also go to their markets, or to have advisors in the board. And the next tip, or an easy tip, is also look at all the accelerators programs you have worldwide, and you have a lot of countries which are supporting that, and go there, staying some months there, and try to find your partners. That is what I normally tell the startups. It's an easier way to go globally.
Excellent. Thank you for these insights, very practical, hands-on insights, Ralph. My next question goes to Surabhi now in this chapter. How do you help founders connect their purpose, innovation, and business model to create real impact and attract international opportunities, Surabhi?
Well, sustainable without strong business model is just a fancy idea. When it is profitable, only then the sustainable business also will scale. So when I work with founders, I ask them this really hard question early on. Is your purpose built into pricing, your profit model, and your operations? Or is it just sitting on a slide deck, right? If you're serious about your impact, you can't treat purpose like a side project. It has to show up in your price, how you deliver, how you grow. Because if the business doesn't work, then the impact won't last anyways. So just putting that sustainability slide to please that investor community doesn't really help. And purpose and profit, they need to go hand in hand. So I see founders very focused on purpose because they're driven by that, and they really don't care about the cash and the profit and the money part of the business, and that's not nice. And the reverse, just to get investors excited with the sustainability, but having only money as a goal is also not nice. So you have to balance both of them. If you want mission to go really global, as in on the global platform, you have to build a business that proves it can win and then do good at the same time. So mixing it, integrating it with each other is the key, I think. And that's where I kind of focus founders to achieve that balance.
Excellent. Thank you very much for these insights. Actually, well, I think all those questions have really tackled the different aspects of entrepreneurship, investments, intellectual property, sustainability. So I would like to now come to our closing remarks. If you could give each of you one simple piece of advice to entrepreneurs aiming to build a sustainable, borderless business through innovation, investment, and IP, what would it be? May I start with Srabi? And we will continue with Benjamin and Ralph.
Sure.
Thank you.
I think most founders pour all their energy into building a product. They forget to build a business. But the truth is, if business relies on you to function, it's not scalable and it's definitely not investable. So when you go global, this gets even harder because you won't be physically present in every geography. And your team, there's a team in Dubai, there's a team in Berlin, there is a team in Singapore. They need to run independently. And that's only possible when you have systems, processes, clarity without founder micromanagement. And the most successful global businesses that we have all seen do these things very clearly. They solve the real localized problem. The business model that works across borders, they nail that. And the operations that run without founder at the center. And this is where I think founders should really pay attention, that after building a product, focus on building a business and not get stuck in product and geographical expansion of the product without building the business itself. So if you want to grow sustainably and eventually exit or attract serious capital, start designing the business that's not built around your time, around your thinking. Build a system, build systems, build trust, build that value, and that's what makes your business ready for the world. So that would be my very heart-to-heart advice, I think.
Excellent. Excellent. Thank you so much. Benjamin.
We don't hear you.
Benjamin, I think you are muted.
Yeah, thank you very much. My advice would be probably a number, which is 83%. 83%, it's when you look at the valorization of value of the S&P 500 companies, you see that 83% of the value of these companies right now are based on intangible assets. Intangible assets that comprise intellectual property, data, know-how, and so many other things. But basically, that means that 70% basically of a deep tech company or a startup company that just start is based on its intellectual property. So treat your intellectual property as a strategic asset, not just as a legal stuff. Don't wait for success to start protecting it. Build your IP strategy hand in hand with your business strategy from day one. The right IP decision early can unlock funding, attract partners, block competitors, and shape your global expansion. So really, we are in a knowledge economy right now. So if you don't manage correctly your IP and your intangible assets, you are just losing 80% of the value of your company, hoping for the best.
Thank you very much, Benjamin. Ralph. What do you say?
First, I want to answer on Surabhi's point and also the whole discussion, just to make one point that if you are in a big market like India or Indonesia or in Brazilian or in the US, you don't have to go abroad. So globalization, the markets are so big there, do it there and make you happy. So that is just to say, global is depends where you started. And of course, when you start in Singapore, it's a different business than when you start in India, a business. Why to go abroad if you have over 1 billion people to serve, or China is the same thing. So that's just to say. So now, my advice is twofold. One is I have a highly respect from the founders, all the founders I have seen, because you go in a tunnel and it's very dark, and you may see over years not really a light until the end. And can go several years, 5, 7 years. And even you have light with an exit, but still you have to work another 3 years for the company who acquires you, because the deal was an earn-out deal. So that is a preparation. That's my one side tip. So be prepared on that. Sometimes it happened fast, but not very often. So that's one thing. And that makes to the second tip here is really start slower, looking for the product fit more than everything else in the beginning. Pivot where it needed. No pivot is not good, but too much pivots is also not good. So try to find it. And when you don't find it, so it's hard to sell your product because nobody wants to buy it, or it's a big project to sell one product to one customer, then stop the thing, because the tunnel can then be endless, and it will never be light in that tunnel. So stop if you think, oh, that's too much, and try something new. That is my tip. So it's very easy.
Thank you very much. That was an interesting metaphor with the tunnel, and the tunnel being very, very long, and the light even at the end of the tunnel can still, drag you to another direction or to another road. So thank you very much for these insights. Well, we ran actually our panel discussion today. Thank you all for your participation. And this recording is going to be available in June. I'm just stopping the recording right now.
Thanks, Birgul, for being such a wonderful chair and enlightening us with your inspiring speech. I'm super excited today to have two female leaders from the global fintech space, Theo and Efi. They are both having some amazing careers. They're authors, they're keynote speakers, they're driving and leading and shaping. And our focus today in the spirit of entrepreneurship without borders will be agents, AI, and financial inclusion. As we have learned over the last weeks and recent days, even, everyone has their own agent in the future, and it will have a huge impact not only in our economy, but also in terms of access, hyper-personalization, and how we do finance in the future. So big questions, Efi. I would love you to give us your insights, your views. You just have been in New York, coming back. First of all, what do you see where the future is going with agentic AI? What do you think of the mind-blowing release Google just did recently?
Well, agentic commerce seems to be here. It's more real, faster than we ever expected. It's not surprising that we are starting from e-commerce to see these changes instead of other industries. I think it's similar to the internet era. It is transformational. I am delighted to see that we are moving and we have healthy competition, because I'm worried overall that this next tech AI cycle, it shouldn't have the same concentration of power as the previous one. So I'm happy when I see more competition, whether it's from the existing big tech companies or from new startups. From New York, from the US, I bring the sort of sentiment that there are many startups that have big dreams, big visions. There is money that is funding them in this area. Anything that is around agentic AI has, the possibility of getting funded. So there's a lot going on there. What I keep on the radar is how much of this will be used to mitigate the digital divide that unfortunately is increasing through this new technological advancements. And that is where I feel that we need to deploy resources, AI resources, in helping to use AI to reduce the digital divide. And especially in finance, the digital divide is huge. We have a large part of customers and small businesses that do not have the capability to use all the tools that are out there. And I want to see more AI to be used for that purpose. I envision anything that is around using conversational AI to help vulnerable parts of the population to be able to access the services, because they don't have the capability now, they don't have the education, the know-how, or even the hardware. So let's use AI, the advancements in AI, for that. I want to see my 85-year-old mother to be able, with natural language, to use these tools. Can we get there? Can we acknowledge that there's so many languages, that accents, everything? We need to be able to use AI to bring more people in this digital economy that is going so fast paced. There's another area that I feel in financial services that AI and agentic AI will bring a huge disruption, and that is the space of wallets. We're all using wallets. I've said it, and Theo always laughs when I say, today's wallets are a bit dumb if we think of the capabilities that can be built in the future. We would like wallets to be really serving us, the individuals, discovering what's best for us, comparing, giving short lists, advice, watching our back 24/7, because up until now, all these wallets and the smart interfaces that exist, they really exist more to help merchants sell more, or tech providers get more engagement, and not really each of us individually. And I'll stop there and maybe give it over
Yes.
to Gail.
Yeah, a little secret about Theo, because she usually has a wonderful background, which is related to Star Wars. So Theo is very much already into science fiction. And now we see science fiction converting from the future into our reality. And Theo, you have written some recently a book, AI in Banking, which already is on top list, on top mind of a lot of people. And you have a very strong focus also on how to use technology for good, how to use finance for good. That was your other book I've been reading. So what's your view in terms of also EFI's big challenge, the digital divide, and how can we make sure we bring more people into the system?
Thank you so much for having me. Gosh, where do we start? One of the things I often like to say is that there's no financial inclusion without digital inclusion, especially when we look at the future where everything is AI enabled and digitally driven. With that being said, I do love numbers. So here's some numbers in context with respect to what Ife is talking about and how and who is included in the current ecosystem and how do we include more people, or if that's even something that's doable. For example, take the African continent. According to GSMA, there are 2,650 times more. So it's 2,650 times more content available in English on the internet compared to African languages. None of the top 34 languages being used on the internet globally is African. What does that mean when we look at an AI-enabled future? We're looking at all of the top AI companies using what is available in the digital economy, crawling the internet, learning from the internet, creating models based on what they see in the digital economy. Now, if none of the top languages being used in the entire continent of 1 billion people is included in that digital economy, unless you speak English, I would say that is not something that will bring us to a closer world, if in fact that is the goal, right? And so I think that in itself, and put it into a wider context, there are over 7,100 living languages, people that speak, people that write. And, you and I have exchanged notes quite often about the nuances, even within each individual language itself. So if we want to create a future where we can natively use what we say in our culture, have it documented in a way that we use it and how it is is alive, if you will, and use that to create a better future for us, then we need to fix that gap. And that is urgent, because otherwise the gap that we have right now with the current internet is just going to get wider and wider. So anytime when I look at something like this, that is always my top concern. Now, with that being said, onto a slightly more positive side, if we look at the whole agentic AI market, is huge, and there's no doubt about that, right? If you look at, for example, PwC, they say the whole economy, when we look at agentic AI, is about $16 trillion in just a few years. Is ginormous. What that means is we have access to technology that we can create things much faster, and not just a robot. It's not a chatbot. It's actually something that can understand what you say and something that can act on your behalf, right? So
It's
there's
making the
actions.
decisions. Yeah,
Exactly.
that I think is a big, and who controls these decisions? But we are already there. I mean, the agents are here, and I think you make a very important point. And there was also recent studies which compare the different models. So the model DeepSeek, if you use this also yourself, you put in a question about what is the situation of AI in different countries. You ask this question to ChatGPT, so OpenAI. You ask this to Mistral from France, and you ask this to DeepSeek. You get 3 answers which are slightly different and tainted by the country they are from. So it's very interesting to see that it's almost like they become ambassadors, which is not unusual, because ambassadors in a positive sense, or they are also manipulated by the data which feeds into them. Obviously, the Chinese scroll different data, and as you say, from a language point of view, language is culture, and language is something which connects us. I mean, if I learn another English language like English or like French, then I understand the culture better. So just using AI to translate wouldn't do the trick. So we have seen in the Google example, they're trying to give context, so which is very different. It's just not pushing the button and trying to make language also more global. But as we discussed, as you described it, language, just the different dialects and whatever, we are not yet there. But we have a lot of the tools. But the question always for us is, do we have the will of the key stakeholders. And also Efi is very often in when we talk on LinkedIn or elsewhere, you are highlighting this fact of superpowers and how do we conquer this and how do we divide the power. It's not only big tech, yeah, so there's more to it. So how do we basically democratize? And one, we have to see that again in context. We have agents, we have stablecoin, for example, where Andreessen Horowitz, one of the guys there, wrote, could be the next WhatsApp, because WhatsApp was crossing the internet. You can all of a sudden very cheaply have messages. You don't need to take the call. So in terms of expensive cross-border, is stablecoin something different in that context? And what does it mean for more access and inclusivity?
You took us to a different point, I must say. It's an ongoing tug of war between centralization and decentralization. And decentralization, there's different degrees. We have various protocols that have been around and now are getting the spotlight, that are building layer one blockchain protocols that really cater to an economy of AI agents. So they are decentralized AI agent protocols. Will they be adopted? I don't know. It's time will tell. We are at a phase in the economy where there's a lot going on at the infrastructure level. Infrastructure for agentic AI economy, these protocols, payment infrastructure, all these stable coins, whether they are protocols or just issuing stable coins and running them on existing protocols. There's another, if you want, competing factor there. So we're in a stage in the economy where a lot is competing to change. It's early, it's unclear who will win, and a lot of it has to do with regulations. Stablecoin is the perfect example. All this booming activity from the Circle payment network, and Coinbase and Ripple trying to buy Circle. And just today we were reading that a couple of US banks, major US banks like JP Morgan and Bank of America, may be getting together as a consortium and issuing a stable coin when the Genius Act is actually legalized, if you want, or approved. So this world is changing as we speak, which there's so many levels of change.
No, thank you, Efi. I sorry if I picked on you and thrown it at you, but I have seen so much. You were so deep into the topic. I thought we get some insights from you. And you were also co-authoring with me a book, Fast Future Blurs. And one of the chapters you did with another co-author, which I'm super excited about, it's how to become an AI native. So if we think about entrepreneurship and leadership in that sense, which is our big topic also at the World Business Angel Investment Forum, how do companies, maybe in 2 sentences, or leaders become real true AI native, because we all have not been born as AI native?
I think it's an interesting question. So just recently, I have been playing with one of Salesforce tools called the Agent Force. And in there, I created like a fictitious scenario where, it's a credit union and we want to help the credit union sign up, open accounts for small business owners, right? And traditionally, this process is cumbersome. It requires a lot of paperwork. It requires a lot of interaction between the banker and the small business owner during business hours. And what we have been able to do using the agents, the AI agent that Salesforce has, is intuitively created a whole job for a virtual human, if you will. I think that's what they call them. And we described the job verbally. I was actually talking to the agent in English and trying to say, hey, this is what I think that person will need to do. This is the front end banker. And the goal is to seamlessly enable a small business owner reach out to the credit union and open a bank account and in the long term, potentially provide access to small dollar lending. And within, I would say, maybe 2 minutes, it created a whole flow and basically checking back against its own LLM, looking at here are the documents that, when someone does approach us, here are the things that we need to check, and here are the different steps. It laid out perfectly what process it will automate, what things they will need to reach out, what they need to check. It was fascinating, right? And I think what that shows us is that potentially we can also leverage these agents to help, for example, a small farmer in Guatemala and trying to understand how they can sell across borders, not just processing transactions, right? And going back to originally what we say agents can do is to actually take actions, not just reacting. It can also help them probably serve as business advisors, right? Telling them, here's the market, this is what you need to do. Here are the different compliance questions that you need to make sure that you address. And by the way, to your point, Martha, in the long term, also help them operate across languages. So one of the credit unions actually in Central and Eastern Europe, they have launched an AI lab about 2 years ago, and they created an AI tool precisely to serve that region. Now they operate across 8 different countries with different languages to help that particular market. So there are good stories we can tell.
Oh, that's a wonderful example. If we now come to a close of this panel, which we could continue, I think, not only for hours, but for days, with your wonderful experience and also the sharing of what you have recently seen in not only Salesforce, but we see in different countries how you can use it, and you have yourself also experienced this. What would be your closing recommendation for entrepreneurs in particular? How should they deal with this new world across borders? And what does it mean for them when we talk about agentic AI and in particular financial inclusion? Big question all in one.
It's a big
pick.
question. There's so many new challenges that are out there that need to be solved. So, for example, in financial services, the big new challenges is about all these deep fakes are creating a huge problem in terms of know your customer, know that your business, how to onboard, people and agents for banking services. This is a huge area with a lot of opportunity. How will we onboard AI agents? How do we verify their identity? Yes, we have the technologies, cryptographic, verifiable credentials, but how do we integrate them so they work seamlessly? So that's an area that, there's a lot of challenges, pain points, problems, and opportunities to solve. I think it's an extremely important one to focus on.
I can't agree more. I think as we've seen time and time again, right, there are 2 sides of technology. We'll call it the duality of AI, and that's precisely that. And if there's anything I would say that technology is moving fast with or without us. But what we can control is we can control and we can choose what we do with it. It's our choice. It's our choice to use it for good, to basically provide a better future for more people, or is a choice that you keep it and further whatever personal goal that you have. So I hope we choose wisely.
It couldn't be better closing words than yours. So it's AI's a human choice. What we do it is this duality and double-edged sword, as we always say. Not only with technology, with the last year was everything about Gen AI. This year's everything about agents. So let's make sure that what we have is used wisely. Thanks a lot to the 2 of you, 2 brilliant minds and brilliant hearts for being with me today at this wonderful Swiss World Business Angel Investment Forum Day. Thank you.
Thank you.
Thank you.
Dear distinguished keynote speakers, esteemed panelists, honored members of WBAF, valued participants and guests. As we drove this remarkable World Business Angel Investors Week 2025 to a close, I want to take a moment to reflect on the journey we have shared over these transformative days. Our collective focus, entrepreneurship without borders, advancing partnerships for a sustainable future, has inspired a wealth of ideas, deepened our connections, and most importantly, reaffirmed our shared commitment to building a future where innovation and opportunity know no boundaries. This week, we gathered as a truly global community. We have seen firsthand how entrepreneurship, when nurtured beyond borders, becomes a powerful force of good, for good, driving job creation, fostering innovation, and catalyzing sustainable progress in every corner of the world. Our conversations have highlighted that the challenges we face, climate change, economic inequality, digital transformation, are not confined by geography, and neither are the solutions. Our keynote addresses and panel discussions have been nothing short of inspiring. We explored how risk thinking can empower entrepreneurs to lead in a climate-impacted world, reminding us of the vital role that visionary, resilient leadership plays in shaping a sustainable future. We dove into the complexities and opportunities of scaling industrial impact ventures across borders, learning valuable lessons in sustainable digital transformation, and the importance of adaptability in a rapidly changing landscape. We also examined the critical strategies for unlocking global collaboration, how innovation, investment, and the protection of intellectual property can serve as the bedrock for entrepreneurial success in a sustainable world. And looking ahead, we ventured into the frontier of AI, agents, and the future of financial inclusion, recognizing the immense potential of technology to democratize access to capital and opportunity. Throughout all these discussions, one theme has stood out: the power of partnership. Whether through roundtables, workshops, or informal conversations, we have seen that when entrepreneurs, investors, policymakers, and industry leaders come together, we can achieve far more than we ever could alone. The WBF's mission to champion smart capital, investment that comes with mentorship, networks, and strategic support, has never been more relevant or more necessary. As we move forward, let us remember that our work doesn't end here. The connections we have made, the knowledge we have shared, and the vision we have crafted together must now be translated into action. Each of us, in our own way, is an agent of change, empowered to break down barriers, champion inclusion, and ensure that every entrepreneur, regardless of their background or location, has the opportunity to succeed. Let us carry the spirit of this week with us, a spirit of collaboration, innovation, and unwavering optimism. Let us continue to build bridges across borders, to invest not only in ideas but in people, and to shape a future where entrepreneurship is truly a force for sustainable, inclusive growth. On behalf of the World Business Angels Investments Forum, I extend my deepest gratitude to our keynote speakers, panelists, members, participants, and guests. Thank you for your passion, your insights, and your commitment to a better world. Together, let's keep advancing partnerships for a sustainable future without borders. Thank you.